All right, let's dive straight into something I know you've been watching closely. As an expert who really breathes crypto, machine learning, deep learning, and AI, you've undoubtedly caught the buzz around Bittensor.
Oh yeah, definitely. It's hard to miss.
But today, we're not just skimming the headlines, right? We're going full subnautical, exploring every layer of this really fascinating intersection.
Absolutely. And what's truly compelling here, I think, is how Bittensor isn't just, another Christo project or another AI model. It fundamentally aims to redefine AI development itself.
How so?
Well, by blending decentralized networks with artificial intelligence in a way that's, frankly, both technically sophisticated and incredibly ambitious, our mission for you today is really to extract the most important nuggets of knowledge.
Like a shortcut.
Exactly. Give you that shortcut to being truly well-informed without feeling, totally overwhelmed by all the noise out there.
Perfect. So, how does this translate for someone like you, already deep in this world? We're going to pull apart the layers of Bittensor networks, right? From their foundational ideas to their market mechanics, even peek into their speculative future.
Yeah, covering the key stuff, who's
Hmm.
behind it, the funding story, its core objective, how it's evolved.
The traction it's actually getting, the innovations, key players,
Yeah.
and yeah, crucially, how you might profit and what the risks really look like. No need for the basics here.
Right.
Expect maybe some surprising facts and just a really deep, informal conversation tailored just for you.
Sounds good.
So, the real game changer with Bittensor, it seems, is its core objective, building this intelligent marketplace for high-quality AI models.
Mm.
Essentially, it's like crowdsourcing AI-related digital goods,
Yeah.
aiming to create an open-source AI ecosystem. The goal is democratizing access to advanced AI capabilities, yeah.
That's the pitch. And it stands in pretty stark contrast to the
Mm-hmm.
centralized models we see dominating everything now.
Mm-hmm.
Your OpenAIs, Google's, maybe even X. And you've hit on a crucial point there. If you step back a bit, this isn't just about cool tech. It's really about a fundamental shift in power dynamics.
Okay, unpack that a little.
Well, centralized AI relies so heavily on proprietary data,
Yeah.
massive computing power. It often just locks out smaller players entirely.
Mm-hmm.
And beyond that, you've got big issues, right? Unauthorized data use, potential censorship skewing results,
Mm-hmm.
a real lack of traceability for where the data even came from.
Yeah.
Plus, training those huge models, it can easily cost over $100 million,
Wow.
which makes truly decentralized efforts incredibly challenging, just purely from a resource perspective. Bittensor tries to flip that script, by democratizing access. It's deliberately designed to try and overcome these hurdles.
Okay, so how does it do that? Let's talk mechanics. Forget proof of work, proof of stake for a sec. Bittensor's core innovation is this UMA proof of intelligence consensus mechanism.
Right, the proof of intelligence.
Think of it maybe as a decentralized, peer-reviewed marketplace for AI models, where contributors earn TAO, their token, when their AI output is judged actually useful and valuable by the network itself.
Exactly. It's not about just raw compute power like Bitcoin.
Yeah.
It's about the quality of the AI contributions. So you have miners providing resources and models, and then validators.
What do they do?
They evaluate the quality of those outputs, and that directly influences how the rewards, the TAO,
Yeah.
get distributed.
Okay, that makes sense. But it also begs the question, right? How do you stop bad actors from gaming a system based on something as kind of subjective as intelligence?
Yeah, that's the million-dollar question, isn't it?
Yeah.
The mechanics here are actually quite clever. Validators distribute tasks, they rigorously evaluate the results, creating this continuous feedback loop where genuinely higher quality contributions earn more rewards.
And collusion, like groups teaming up.
Right? Cabals. Bittensor has a pretty sophisticated defense against that. It exponentially rewards peers for being trusted by the majority of the network. The system is designed so that dishonest subgraphs, these little colluding groups, should decay over time. It makes collusion economically unprofitable, at least in the long run. That's the theory.
Interesting. And this whole system runs on its own blockchain, the subtensor blockchain.
Correct. It's a layer one, customized using Substrate. And it's interesting, actually, it evolved from being a Polkadot parachain. They migrated to their own layer one back in 2023
Why the move?
to get full control over their infrastructure,
Mm-hmm.
which is pretty critical when you have such a unique consensus mechanism and this whole subnet architecture they use.
Ah, okay. Subnets. So the network is divided into these autonomous subnets, each doing specific computational tasks.
Exactly. And we're talking a whole range of things, from AI model training and inference services to financial analytics, computer vision, you name it. It's like this diverse, interconnected marketplace of specialized AI brains.
Gotcha. So it's not just one giant AI brain, it's lots of little specialized ones working together, kind of.
Precisely. And that infrastructure is already showing some pretty impressive real-world traction. You look at Cortex.T, for instance, that's subnet 18. It generates dynamic synthetic data for testing models using things like GPT-4 and GPT-4.
Okay.
Then there's subnet 37, focused on model fine-tuning. It leverages the decentralized network to train specialized models, like chatbots, with miners all competing to do the best fine-tuning job.
And are they any good?
Well, look at OpenCodo, subnet 5. It focuses on text embedding models, and apparently its miners have actually outperformed OpenAI's models in some external benchmarks.
Really? Outperformed OpenAI.
That's what the benchmarks suggest. And we've seen Prime Intelligence train the first decentralized 10 billion parameter model, Intellect-1, on the network.
Wow.
And usage numbers are starting to talk too. Dippy apparently hit over 4 million users. Celium generated more than $1 million in revenue in just 5 months.
$1 million in revenue. That's significant.
It is. And Subnet 19, another example, has even surpassed Azure, Microsoft's cloud, as an inference provider for certain DeepSeek models in specific specialized domains. So yeah, these aren't just theoretical white paper projects anymore. They are delivering tangible results.
Okay, so let's switch to the economic side. TAO, that's the native token, right?
Sure.
Cap supply, 21 million, one token minted every 12 seconds. Sounds kind of Bitcoinish in that sense.
The supply mechanics, yeah, have that familiar feel.
Oh, yeah.
But it's how TAO is earned and staked that really differentiates Bittensor's market mechanics. It's not just a reward token.
Well, you mentioned validators and miners getting it.
Yes, but it's also like a credential for accessing the network itself. It's used for staking, obviously, but also for network access fees. Miners, validators, subnet owners all interact with TAO, and even for basic transaction fees on the subtensor chain.
Got it. And there's a halving.
Critical point, yes.
Right.
The issuance rate halves every 4 years, just like Bitcoin. The next one's estimated for around November 29, 2025.
Okay, mark the calendar. What about the initial funding? How did this whole thing get bootstrapped?
It was relatively low-key compared to some crypto giants. They had 2 named institutional investors early on, the Hypera and Skycatcher. Now, the original system for distributing TAO involved this thing called the root subnet, subnet 0.
Subnet 0, the root. Okay.
It basically allocated the TAO issuance, but it drew a lot of criticism. People called it an oligarchic voting system because the power was really concentrated among a fixed group of 64 validators. The top few held a huge chunk of the voting power.
Doesn't sound very decentralized.
Exactly. And that structure naturally raised big questions about sustainability and true decentralization, especially with that halving looming, which cuts rewards.
So something had to change.
Precisely. And it did. The biggest shakeup for TAO, and maybe the whole network, came with the DTAO Dynamic TAO upgrade. That was deployed on February 13th, 2025.
Dynamic TAO. Okay, what did that do?
It fundamentally shifted things. It basically dismantled that centralized subnet 0 allocation structure. Instead, it moved towards a truly market-driven resource allocation model.
How does that work?
Now, TAO holders directly influence which subnets grow by staking their TAO into specific liquidity pools for each subnet.
Ah, okay. So I, as a TAO holder, can choose which subnet I think is promising and stake my TAO there.
Exactly. And in return for staking, you receive these things called alpha tokens, which are specific to that subnet.
Alpha tokens.
And the price of these alpha tokens, determined by market supply and demand for staking in that pool, directly determines the amount of TAO emissions that subnet receives.
Whoa. So it forces builders to actually deliver real value and attract market demand, not just like cozy up to the big validators.
You got it. It forces them to focus squarely on delivering value that convinces TAO holders to stake with them.
That's a pretty radical shift.
It really is. Zooming out, DTAO creates this really powerful feedback loop. Miners, validators, and the subnet owners themselves now earn these alpha tokens.
Instead of TAO directly.
They earn alpha tokens, which essentially function as a direct claim on future TAO emissions designated for their specific subnet. The split is roughly 41% to miners, 41% to validators, and 18% to the subnet owners.
Okay, interesting split.
But this system introduces continuous inflation of these alpha tokens. So there needs to be sustained demand for the subnet's actual utility, its services, to keep people staking and offset that dilution.
So successful subnets attract more staking.
Which pushes up their alpha token price, which leads to them getting more TAO emissions. It's basically a market-driven AI incubator.
Yeah.
It aligns capital allocation directly with perceived innovation potential and market traction.
That makes a lot more sense economically, a market deciding versus a small group. But, okay, this huge shift. How is the overall network governed now? Who makes the big decisions if Subnet Zero isn't calling the shots on allocation?
Good question. The governance structure is set up as a kind of bicameral legislature. You have a
That
triumvirate.
sounds very Roman.
Huh? Yeah. It's made up of Open Tensor Foundation employees. They're the ones who create proposals.
Okay, so the foundation still holds proposal power.
Proposal creation power, yes. But then these proposals need approval from the Senate,
The Senate.
which consists of the top K delegate hotkeys, basically, the entities chosen by TAO stakers to represent them in governance. A proposal needs a majority consensus there, 50% plus one vote, to pass. Then a triumvirate member formally closes it for execution.
So it's foundation proposes, community delegates approve. What about Subnet Zero now? What's its role post DTAO?
Since DTAO, yeah, it's essentially just a TAO-only staking pool. There are no miners, no active AI tasks happening there. It really just functions as a kind of risk-off parking lot for TAO holders who don't want to bet on a specific subnet yet,
Like a basic savings account for TAO?
pretty much. And the community sees a few potential paths for it going forward. It might just fade away offering near zero yield as everyone moves their TAO to subnet LPs.
Option one, fade out.
Option 2. The Senate could vote to lock in a permanent small risk-free rate emission stream for it. Keep it as a baseline.
Okay.
Option 3, more speculative, is maybe it reboots as some kind of meta service layer, coordinating complex workflows across different subnets. But that's just talk right now, no formal proposal.
Gotcha. Okay, let's shift gears to market opportunities. This concept of AI financialization seems key here.
Huge. Bittensor is really pioneering new economic models for AI. This idea that AI models and data themselves can become investable, stakeable assets, that's a game changer.
How so?
It potentially transforms how AI resources get allocated, moving away from just centralized corporate R&D budgets towards truly market-driven development, where the best ideas attract capital directly through staking.
Right, like the DTAO mechanism we just discussed.
Exactly. And you already see specialized subnets popping up that hint at this. Xiaoxi for financial forecasting, MetaSearch for data analysis. They're showing how domain-specific intelligence can be tokenized and potentially monetized.
So that raises a big question, doesn't it? With all the growing concerns about AI centralization power in the hands of a few big companies, can Bittensor actually offer a credible alternative path? A way to democratize access and build a more equitable AI future?
That's certainly the hope and a core part of its narrative. The network aims to do exactly that, which positions it pretty uniquely. And you're seeing integrations starting to happen with other Web3 projects too, like Vanna for user-owned data, Zuvu AI building service layers on top.
Creating this bigger ecosystem.
Yeah, what some people are calling a kind of data plus compute plus economy model. It expands Bittensor's potential reach and applications way beyond just its own internal subnets.
Okay, it sounds incredibly promising, very innovative, but let's be real, there have to be risks, challenges. Let's turn to the other side of the coin.
Oh, absolutely. Significant hurdles.
Like what keeps you up at night if you're bullish on Bittensor?
Well, first off, the sheer technical complexity of fusing AI and blockchain successfully. It's immense. Don't underestimate that. Scaling is already proving to be a very real challenge. As subnet activity grows, you see gas spikes, network congestion, classic blockchain scaling problems.
Growing pains.
Definitely. And there's the constant risk of emergent behaviors. Sophisticated participants trying to game the system, finding loopholes in the UMA consensus or the DTAO market mechanics. Collusion is always a threat in these complex systems.
Especially in crypto, yeah. People are always looking for an edge.
Always. And the sustainability of the whole economic model, that's still a major debate, honestly. While DTAO aims to be market-driven, it introduces its own set of challenges.
That has.
We'll take subnet owners, they receive rewards and alpha tokens, right? But to pay for development costs, servers, salaries, they need TAO or fiat, so they have to sell their alpha tokens.
Creating sell pressure.
Exactly, which can potentially hurt their future TAO emission allocation if it pushes the alpha token price down. It kind of creates this potentially perverse incentive.
How so?
It could foster short-term thinking. There's intense pressure to deliver immediate market performance, pump that alpha token price, maybe at the expense of crucial long-term technical innovation that doesn't have an immediate market payoff.
Right, the classic short-term versus long-term dilemma.
And then there's the ever-present risk of stake centralization. Even with DPAO, what stops a few large entities from controlling vast amounts of TAO or dominating multiple key subnets? It's still possible.
Decentralization theater, potentially.
It's a risk you have to watch. And then there's the halving, We mentioned it's coming, November 2025. Block rewards drop to 0.5 TAO. That's a big cut in incentives.
So miners and validators might just leave.
They might, yeah. If external demand for the actual services provided by the subnets isn't sufficient to make up for those decreased TAO rewards, why would they stick around? Profitability is key.
That seems like a major stress test for the network.
It absolutely will be. Plus, it's worth remembering the OpenTensor Foundation operates the actual subtensor blockchain using proof of authority, meaning they have the technical capability to, for instance, pause the chain if needed. While that can be a safety mechanism, it definitely raises valid questions about the network's true level of decentralization compared to, say, Bitcoin or Ethereum.
Right, if a foundation can hit the pause button.
Exactly. And some critics go further, arguing that even with DTAO, the core structure still kind of resembles a top-down grant system. Because the total TAO emissions are fixed per block, adding more subnets doesn't increase the total reward pool.
So it just dilutes the rewards for everyone.
Potentially, yeah. It could lead to this dilemma where growing the network, adding more specialized subnets, actually makes it less profitable for existing participants unless overall TAO price or external demand skyrockets. It suggests potentially inefficient resource allocation.
Okay, lots to chew on there, on the risk side. Complex stuff. So bringing it back to the listener, to you, given all this, how does this translate for your portfolio? How could someone potentially profit from this landscape, acknowledging those risks?
Right, the practical side. Well, beyond simply buying and holding TAO on an exchange, which is the most straightforward way.
Yeah, the basic HODL strategy.
There are a few more active avenues. You can stake your TAO directly to validators. Currently, that yields around 16% APY, roughly.
Not bad, but you said that'll decrease post-halving.
Inevitably, yes.
Huh.
The TAO rewards component will drop. The alternative is staking in those subnet-specific liquidity pools we talked about.
Oh, yeah, alpha tokens.
Exactly. Potentially higher returns there if you pick a winning subnet whose alpha token appreciates. But it also comes with much higher price movement exposure and the inherent volatility of betting on a specific, perhaps experimental subnet. Higher risk, potentially higher reward.
Makes sense. What about getting even more involved, like being a miner or validator?
That's definitely an option, yeah. What really stands out here is the sheer speculative potential some people see. But practically, to be a miner, you'd need to customize hardware and software for the specific subnet you want to support, then register a neuron that costs less than 1 TAO, typically. But you're usually bound to just one subnet as a miner.
Okay, so specialized. Validators.
To be a validator, you need to stake a significant amount of TAO yourself. The minimum threshold is based on whatever the 64th ranked validator has staked, so it fluctuates. But validators have more flexibility. They can serve multiple subnets simultaneously.
More capital intensive, more flexibility.
And subnet owner.
That's the top tier, really building a part of the network. It involves paying a registration fee, currently around 3,000 TAO, though that's refundable if you deregister the subnet later. Big commitment.
Right. Now, you mentioned speculative potential. Any wild predictions floating around acknowledging this isn't financial advice, of course? Of course not. But yeah, you see some pretty eyebrow-raising speculation out there. There was one analysis on Reddit, for example, looking at historical crypto market trends, betting on AI being the dominant narrative for this cycle.
Okay.
And they came up with a pessimistic TAO price prediction of over $8,500 by the end of 2025.
Pessimistic $8,500. Wow. What's the bullish case?
Their bullish case was nearing $62,000 per TAO by end of 2025.
$62,000. That's astronomical.
It is. And they even suggested that the profits from DTAO staking, those alpha tokens, could potentially multiply those base TAO gains significantly if you're in the right subnets. Again, purely speculative analysis, a calculated opinion based on their specific thesis, not a guarantee by any means.
Understood. But it shows the level of excitement or maybe hype surrounding this. So Bittensor clearly stands at a really pivotal crossroads, wouldn't you say?
Absolutely. The DTAO implementation is, without doubt, a watershed moment. It could be the thing that catapults it into more mainstream awareness, or, well, it remains a fascinating but ultimately niche experiment for the crypto and AI hardcore for a while longer.
Yeah.
The next year or two are critical.
It really forces that crucial question again. Can decentralized AI, like Bittensor is trying to build, actually create high-value, real-world applications that people outside the crypto bubble will use and pay for?
That's the ultimate test. And the early evidence, like that Subnet 19 example surpassing Azure for specific tasks, suggests it's definitely possible. My expectation. We'll see substantial consolidation.
Fewer subnets?
Yeah. among the 80 plus that exist now.
Hmm.
Over the next couple of years, I bet only a handful emerge as truly valuable, economically sustainable entities.
Hmm.
Many will likely fail or fade away.
Survival of the fittest, market style.
Exactly. And ultimately, if Bittensor succeeds broadly, it will likely become kind of invisible infrastructure, powering specialized AI applications behind the scenes, much like most people use blockchain today without even realizing it.
So its success hinges on those individual subnets.
Completely.
Hmm.
They have to outperform centralized alternatives in specific niches, whether that's specialized data marketplaces, compute arbitrage, financial prediction, whatever. The DTAO model forces subnet builders to prioritize that real-world utility and actual revenue generation. It's accelerating the ecosystem's maturation, pushing it from purely experimental projects towards becoming genuine revenue-generating businesses.
So you came here looking for a deep understanding of Bittensor, and wow, I think we've truly pulled back the curtain on this incredibly ambitious project sitting right at that intersection of AI and blockchain.
Yeah, definitely covered a lot of ground. Stepping back one last time, Bittensor's core mission, trying to decentralize AI development, it really does feel like an essential potential counterweight to the massive concentration of AI power we're seeing in just a handful of huge corporate
A
entities,
necessary experiment, maybe?
perhaps. So the question for you now, thinking about everything we've unpacked, the tech, innovation, the market dynamics, the risks,
Hmm.
is how pivotal will that upcoming halving event actually be? Will it be the make or break moment that determines if Bittensor not only survives, but actually thrives as a viable, decentralized alternative in our increasingly AI-driven world?
A truly comprehensive journey into the deep end, wouldn't you say? Lots to think about there. Keep those curious minds working.